Thanks, guys. Let's go back to our agenda. According to the sign-up sheet, about 50% of our people are with us for the first time. Welcome to our Anchorage Meetup. This is starting our 14th year. We meet 9 months out of the year. We don't do June, July, and August because up here in Alaska, everybody sort of goes crazy in the summer, which is now well behind us, unfortunately. I'd like you to take a look at the disclaimer. All comments made and materials presented during this IBD meetup are for educational purposes only, not in any way intended to be interpreted as investment, buy, hold, or sell recommendations. So if you think you hear me say you should buy something, I didn't really say that. Or same on the sell side. All investments have risk. Possibility of losing money is a risk each investor must be willing to accept without looking to blame anyone at IBD or the meetup organization, or in particular me. I'm just an unpaid volunteer here. Personal responsibility of each individual investor is the key point to this disclaimer. So I think everybody's on board for that. I'm appreciative of everyone being here. What I'd like to do is start off and do a poll. It's always interesting to me to see how many people outside of Alaska are part of our Anchorage group. We're going to launch poll number 1, asking for your location. So if you would click on that, please. Let me just get a sense of where everyone is that's joining us tonight. Okay, we've got 65 out of 80 so far. So there's about 12 or 14 more of you, if you wouldn't mind clicking on and letting us know where you are.
A lot of people from the East Coast.
Yeah, bless their hearts. It's 11 o'clock. Talk about dedication here. I'm going to give it about 5 more seconds, and then we're going to end the poll. We've got 71 out of 80. That's pretty good participation. I think I forgot to put overseas on here. I don't know if we have anybody overseas or not.
Do you have overseas down at the very bottom?
It's not on my screen. I needed to expand my window a little bit. There we go.
We have 2 people overseas.
Fantastic. I'm going to end the poll now. We have 77 out of 83 participated. 48% are in the Pacific time zone, 30% Eastern time zone, nobody from Canada, 2 overseas, 3 from Alaska. I didn't vote. So far, we have 85 with us, which I think is a record for us. That gives you a breakdown. Our next poll asks, how many of you this year have owned a leveraged exchange traded fund? It's a simple yes or no. We got really good participation on this one. Only five more seconds here. We've got 80 out of 90 have answered the question here. Have you owned a leveraged exchange traded fund 2023? So I'm going to end the poll. And this, you can see the results. So 81% of you, or 70 have owned an exchange traded fund sometime this year. So hopefully, maybe I need to hit mute all again. So that gives us good information. Thanks for taking the poll. Our main emphasis tonight is going to be getting into our presentation. So real quick look at the big picture. Today was a good day to be in the market. Can you see the big picture that I brought up here? Can you see that one, George?
Yes.
Okay, thank you. So I'm not going to read the whole thing. Dow Jones rallied 331 points Thursday amid a pickup in inflation data as the major indexes reclaimed a key benchmark. Stock market uptrend stabilizes from recent losses. IBD leader Tesla, Airbnb, swing trader Amazon, and Shopify are at or near buy zones. I would encourage you to read the big picture every day. You see from the market pulse, the uptrend's under pressure, and we've got 3 distribution days on the NASDAQ and 3 on the S&P. So that's a little bit of a caution sign. I think the IBD guys are suggesting maybe 40 to 60% invested under these conditions. And you can see the leaders up and down today. They typically highlight 3 stocks, and the 3 they highlighted tonight was Booking Holdings as stock that's now in the buy zone. I was surprised to see the engineering firm I worked for, and I've been with them 45 years. Jacobs was the second stock that they listed, and then a stock that I don't think I've heard of before, First Watch Restaurant, was featured. If you watch the video, you can hear the commentary they make on those 3. Here's Tesla. You see, it's gone through a correction recently, well below the 50-day, and then here it is moving up. Wednesday's IBD stock of the day, Airbnb is tracing a cup base with a buy point of 154. Tesla rallied near 1.8%. E-Giant and IBD swing trader stock, Amazon is breaking out. Shopify shares are adding a handle to the base. If you read this every day, you'll get a good sense of what's going on in the market. We're going to move to our presentation since we have a lot to cover tonight. And one thing I would ask is if you have questions, please enter your questions on the chat room. And I'm going to have Rick Kelleher, who's my co-host. Rick's going to be monitoring the questions. And sometime during the presentation, we'll answer as many of them as we can or at the end. We're going to jump into the presentation on Levers ETFs. We're up to over 100 here tonight. Can you see the PowerPoint, Rick?
Yes.
Okay, thank you. We're going to update a strategy that we introduced for the first time about 2 years ago on Levers Exchange Traded Fund Investing. Tonight, we're presenting computerized back-tested results that we've spent hundreds of hours developing. Over the past 2 years, I've made multiple presentations based on manual back-testing, which can introduce unintended errors or biases, but did the best I could. I developed a set of rules for both a daily and a weekly strategy, and there's been very high interest in that. And I want to thank Amy Smith, who I don't think is with us tonight, but Amy told me she was definitely going to be listening to the recording. Amy is the IBD person in charge of all the meetup groups. Amy encouraged me a little over 2 years ago to share what I've been doing with my backtesting work. We made our first presentation, and then other people asked us to make presentations. One of the challenges is, since I'm not a computer programmer, we were making some assumptions. I had feedback from several people saying that one of the biggest challenges they had is when they were trying to program a strategy, they couldn't find a way to get stochastics to match the Marcus Smith stochastics. Several of us had called the Marcus Smith people, and I don't think they even knew how Marcus Smith was calculating stochastics. It was a bit of frustration, and I got feedback from several people that said, hey, we ought to be able to do better. When people were trying to write a program, they couldn't match the results that I had at all. We had Zoom calls 9 or 10 months ago with Rick Keller and Graham Gamble, and Rajiv Jain was with us, and we were talking about how to improve things. We got really good feedback from Rajiv. He said, the programming I'm doing, I can't get the same results you have. We ought to find a way to do better. I made an appeal in 1 or 2 of my meetups. I said, if anyone is really good at programming and would like to partner with me, I was thankful Rick Keller raised his hand and stepped up. He said, I'm a programmer. I'll help you. Rick and I have had countless Zoom calls and a huge amount of work. We've developed an initial program Rick was writing that has something like 200,000 equations. And every time I say that, it sort of blows my mind. We probably have updated that, I would guess, Rick, probably 10 or 12 times. We're still in the process of updating. I think we did our most recent update, maybe even yesterday. What I want to do is just go through and have this one caution message that, in general, my suggestion is leverage ETFs for experienced investors. For this presentation itself, in addition to the overall meetup presentation, we just have this general disclaimer message about we're doing this for educational purposes only. I met Bill O'Neill more than 20 years ago. After I met Bill, my whole investing strategy and outlook changed for the good. He really challenged me to do better. I went to the last Masters gathering in California back in 2019, and they brought Bill in so we get our photograph with him. And I think most of you know, we lost Bill here a month or 2 ago. Just a great guy that helped thousands and thousands of people become better investors. And then Amy Smith, I met her in San Francisco many years ago, and she invited me to lunch because she knew I was a meetup leader. And then this photograph, we were together down in Florida at an American Association of Individual Investors conference. And then my buddy Rick in Houston. We've spent so many hours together. It cracks me up. Sometimes Rick will tell me what his temperature is, and we could take the temperature in Anchorage and multiply it by 2, and we might be what it is in Houston. And Rick, he's been a member for many, many years. And you want to say anything, Rick?
I got to get you a better picture than that for next month. That's you.
Best I could do
You just climbed.
is develop an Excel-based spreadsheet backtesting program. We've been optimizing a trading strategy. Using Rich program, I can do a 3, 5, or 10-year back test. I can change a couple of parameters, and I have the answer in 2 or 3 seconds. What used to take me over an hour is now just, bam, it's right there. And so because of that, we've run hundreds of back tests, and the results have frankly surprised me as a really good way to trade TQQ and SOXL. Why do we want to look at leveraged ETFs? And I think this is a monthly graph. It's the entire history of TQQQ, which is the triple NASDAQ. And I just drew a red line as what in by my eyeballs a best fit line, but that line represents a compound annual growth rate of 47%. If you put $10,000 into an investment that returns 47%, you've got almost $70,000 in 5 years and $470,000 in 10 years. TQQ, like many stocks and mutual funds or other investments do, they tend to go in cycles or in waves, and there's momentum up and momentum down. And as you've heard at the National IBD Meetup, we heard a speaker talk about trying to catch a portion of these upward swings. The goal is to capture a high percentage, greater than 50%, not 90%, but to catch a good part of those upward swings, but have some sell rules so you only experience a low percentage of the downswings. The goal is to have easy to follow buy and sell rules. For me, a reasonable number of trades. It makes really good sense, and I'm comfortable with a system where I don't have to trade 5 or 6 times a month. Other people that maybe are more in the day trading mode, that doesn't bother them at all. And the other goal is to have experience only a reasonable amount of drawdown. So that's TQQ. Here's SOXL, which is the triple semiconductor index with my best fit line, 42% compound annual growth rate. SOXL is a little more volatile than TQQ. What are the indications of liquidity for exchange traded funds and exchange traded notes? They're similar, but they're not the same. And so when you can see that TQQ and SOXL are head and shoulders volume-wise about everybody else out there, and that's why I've been focusing on TQQ and SOXL. They're extremely liquid. The other thing it tells me is that if these are trading 50 to 100 million shares a day, that's an indication to me that institutions were all over this. And I have a feeling there's some big money out there that has their own. They may be doing automatic trading, selling and buying multiple times a day. I pulled up a 1-minute chart when the market is open, and I've looked at TQQ and a stochastics chart, and I've never done it. I've been tempted, but I've never done it. When you pull up a stochastic chart on a 1-minute chart on TQQ or SOXL, there are very clear buy and sell signals. I think the institutions are making a ton of money off of these leveraged ETFs. Let's look at what the year-to-date percent return is through August 31st. And these numbers may surprise you. So FNGU is an exchange-traded note that is managed by the Bank of Montreal. Then you have SOXL, TQQ, NAIL, PCL, and et cetera. And so you can see my favorites, SOXL and TQQ, are up around 140 to 150% through August 31st. It's been a really good year to be invested in. In fact, the best way to invest in these, if you bought it on January 1, is to do nothing. If you start trading it, you're going to have probably a performance unless that's what's shown on the screen. And let's look at 3.7 years starting January 1 of 2020. This takes us through the COVID crisis through August 31st. This is a buy and hold strategy. And you can see I've marked the performance here. This isn't all of the leveraged funds, but it's the majority of them. And notice TNA, which is the Russell, the triple, down approximately 50%. FAS is the financial triple, down almost 30%. They took our strategy and said, what happens if we apply our strategy for that same exact 3.7 years using Rick's Excel-based program, which brings in the true prices off a database, so we know exactly what the prices are for the leveraged ETF every single day. Using the strategy that we've developed with 20 round-trip trades, meaning 20 buys and 20 sells, we're able to get 600% return on TQQ and about 500% on SOXL with 16 round-trip trades. So what about volatility of TQQ? You've seen this in my previous presentations. I updated this through August 24th when I put the graph together. So since the IPO through 8/24, TQQ has traded 3,406 days. And so I took the change in price and ranked them. You can see that the worst TQQ ever did was in March 2020. It had one day where it went down 35 or 36% in one day. Also in March, it went up about 26 or 27%. If you'll notice that the 5 outliers on price changes on TQQ all occurred March 2020 during the COVID crisis, and both on the down and the upside. But an important point I wanted to show is there's a statistical measurement called standard deviations, something that has 2 standard deviation, which captures 95.4% of all values. So 95.4% of all 3,406 trading days had a variation of no more than down 8.8% and no more than up 7.8%. I've heard people say, oh, I can't touch those leveraged ETFs. They're just way, way too volatile. And it's all relative. This graph gives me some comfort in that I should not see a frequent number of plus or minus 10% days. I'll see a few, but it shouldn't be frequent. So what is Ultra Pro QQQ? I'm not going to read the whole thing. It's by a company called ProShares.
Hey, Floyd.
Yes.
We had one question here. What are the pros and cons of an ETN versus the ETF?
That's a great question. I asked that question of the guys at ProShares last year, and they said the ETN is only as good as the financial strength of the institution that is supporting it. And I actually owned a petroleum ETN that one day I woke up and its net asset value was 0, closed it down. And in the end, they got like 50 cents back per share. It literally evaporated before my eyes. I don't know if that's ever happened with an exchange-traded fund. An exchange-traded fund, it's a leveraged fund that seeks a return of 3 times the return of its underlying benchmark for a single day as measured by net asset value. Due to compounding daily returns, holding period greater than 1 day can result in returns that are significantly different. So I don't know if I thoroughly even know how to totally answer the question other than what the guys at ProShares told me is that the exchange-traded notes are a simulation of a index, and it's only as good as the financial strength of the institution. TQQ is based on QQQ, which is the NASDAQ 100, the 100 largest domestic and international non-financial companies listed on the NASDAQ stock market. And so I've shown you this slide's about a year old, but a year ago, the 10 largest companies was in its market cap weight. It started with Apple, and the top 3 holdings, Apple, Microsoft, and Amazon, was 30% of the value, and the top 10 holdings were 52%. Notice on the NASDAQ, you have companies like Costco, Pepsi, and Tesla. I went and pulled down the holdings on the semiconductor index, which is the base index that SOXL is based on. SOX has 35 holdings, and you can see NVIDIA, Broadcom, etc. You don't see a Costco or a Pepsi on here. SOXL oftentimes moves very differently than TQQ does, but the top 10 holdings represent about 60% of the holdings. So I started doing back testing. I think I might have mentioned earlier, if I didn't, I bought my first leverage ETF. I think it was in 2011, and I've traded and owned leveraged ETFs ever since. But what I saw happen in 2020 during the COVID crisis, in February, if you had 1,000 shares of TQQ, your account was worth $118,800. And 20 trading days later, your account was only worth $32,270 because TQQ dropped 73% in value. Now it's supposed to move approximately 3 times as much as QQQ. Notice QQQ dropped 30%. If there was a true 3-to-1 ratio, TQQ would have dropped 90%. So it performed better than that ratio. An incredible thing happened after the COVID crisis was over. TQQQ went up 144% from March through late August. And QQQ was up 84%. And again, if TQQ was matching it exactly 3 times, it wouldn't have been up 1 and some percent. It would have only been up about 300%. Just gives you an idea of how during volatile times TQQ can move. So as I was doing my manual back test, I had this goal: can we have some buy and sell rules that help us make money without having to do a huge number of trades with a reasonable account drawdown? And in the process of doing my manual back testing, I looked at using simple moving averages or the investor's business day indicator, confirmed downtrend, uptrend under pressure, etc. I looked at Williams R, I looked at Bollinger Bands, I looked at quite a few things, and it's very cumbersome. We're doing this manually, but for me, because I could pull stochastics easily on the Market Smith window, it was just right there. He says, wow, there's a momentum indicator right here. I think I can use stochastics to come up with a trading plan, and that's what my previous presentations were based on. But now that we have everything computerized, we've fully proven to ourselves, and what was being pointed out to me by Rajiv and others, is that if you're using the Market Smith stochastics, you're not going to get the best results because the period of 14.55 is just too long, especially if you're using weeklies. It just doesn't work. On the weekly, that means you're looking back 14 weeks to get your fast and slow line.
I just admitted him. Like,
thank you.
Appreciate it. Keep an eye on that. We'll have to shut off the waiting room next time. What do you think? I don't think we need a waiting room. We'll talk about it later.
Whatever you think. Just as a real quick one, this is a repeat of what many of you have seen before, but for those of you for the first time, this is a Market Smith chart, and it just shows the percent K is called the fast line, or percent D is the slow line. And when they cross, that is a buy and sell signal. During the COVID crisis, I saw one sell and one buy. And the square to the right says if you had 100 shares, when you sold it, you got $95.68 a share. Then when you bought it again in March, you were able to buy it $49.48. Just that one cycle alone allowed your number of shares to go up 93%. The idea is, can we rinse and repeat and do that time again? So what is a stochastics oscillator? It was developed by George Lane when he was with E.F. Hutton back in the 50s. So momentum indicator measures the relationship between prices over a period of time and gives us an idea of swings when it'd be a good time to buy or sell. This is how they calculate it, and they use closing prices. For those of you that aren't mathematically inclined, don't let this bug you too much. Back in February 6th of 2022, I got an email from Mike Scott and Rajiv that said, basically, this is how it works. The closing prices are used, and the timing is 14.55 exponential. Very recently, Mike Scott gave me permission to use a slide from his presentation during that. He was one of the speakers at a 2-day event. This shows how you would program MarketSmith style stochastics in Thinkorswim. You can photograph this if you want, or we'll be sharing the slides, but if you program this in, Thinkorswim will exactly match the MarketSmith stochastics. And a lot of people were frustrated that they weren't able to figure this out. Mike Scott and Rajiv went into the source code, and the numbers now match exactly. Where I show the red arrows are values that are fixed and unchangeable in MarketSmith. I talked to Amy Smith, and she got me in touch with a senior manager that works in the MarketSmith organization. I said, you guys let us change the variables for moving averages. Like if I don't like the 50-day moving average, I can make it a 55, or I can make it a 45. I can make it anything I want. And so they let us change the values on moving averages. And I said, please let us change the values shown with red arrows. Now, whether they're going to take me up on my request or not, I don't know. I hope they do. What we've discovered is the 1455 and the 8010 does not get you the best results. That 14 time period is just too long. And then the other point is for MarketSmith, the fast line and slow line value, when it's calculated, it's always a whole number and they round down. And so if they calculate the fast line mathematically is 9.9 on the MarketSmith chart, it will be plotted as a 9. They always round down. We've concluded that I like to use the weekly charts, and for weekly stochastics, we get excellent results using 533 exponential moving average. K is the fast line, E is the slow line. Changing stochastic variables is really easy to do in Thinkorswim, TC2000, and other programs. So let's talk about the trading rules for 2023. They're very simple. We only have one buy rule. And the buy rule is when you have a weekly chart and you have your stochastics on there, if the weekly fast line crosses above the slow line, you buy it at the end of day or the closing price, but only if the fast line is not below the oversold line. And that's a very rare time that ever occurs. When the weekly fast line crosses through the slow line, that's a buy signal. Once you own it, when do you sell it? And so we only have 3 sell rules here. You sell if the weekly fast line drops below the slow line, but only if the fast line is lower than the overbought line, which is a variable, and you can do it at the end of the day price. Typically, because it's a weekly chart, this would occur on a Friday. If you're a little more aggressive trader, there's nothing wrong if you see a clear signal of where this thing is headed to make your sell decision prior to Friday, understanding you're taking a little bit of risk that could be higher on Friday. Sell rule number 2, we have a 2A and a 2B. In our backtest program, we say, what happens if you get a 1-day drop in TQQ? And you can set that at any value you want. You can make it 3%, 5%, 10%. If at the open, TQQ is below that percentage, it's an automatic sell, and you sell it. You don't wait till the end of the day, you sell it right then. Or oftentimes TQQ will gap down, but it won't gap down by that 1-day percent drop that you've set. It will drift lower during the day, and if it hits that percent mark, that's another sell. Your percent drop is based strictly on the previous day's closing price. This is not a trailing stop. This is just a percent drop based on the previous day's price. And we only have one other sell rule, 3A and 3B, where we have a trailing stop percentage. That percentage is a variable based on the highest intraday price during the time frame you've owned TQQ. This operates just like a trailing stop does. If TQQ hits another intraday high, that resets where that trailing stop is going to kick in. You can do it at the open price, or if your trailing stop is hit intraday. I've got something here called sell rule number 4, but all number 4 says, well, after you've sold it, go back and look at rule number 1 and see if it's time to invest again. And something that Rick and I are working on with real money is when you get a sell signal on TQQ, should you buy SQQQ? And if you do, when do you sell it? I think that's going to be a topic for next month. Here's an example. These are just very preliminary variables for you to look at.
We don't want to promise a working system by then, but this is definitely one of the things we're working on, combining the TQQ and SQQ. We don't know how long it's going to take to find the system we're happy with. I think the potential is huge.
So Rick is making sure I don't overpromise her. We're definitely motivated because if we can make 200 or 300% on TQQ, how much can we make if we have a strategy that combines with SQQ? It's going to be up to each of you individually. If you want to program Thinkorswim and start trading with these strategies, a good place to start might be your 1-day drop at minus 13%, your stop loss value at minus 18.1%, move that overbought line from 80 down to 37, which is counterintuitive. Your oversold line is at 10, Market Smith style stochastics, but the variables are 533 exponential moving average. And so in 5.7 years, we did a back test with 29 buys and sells. We ended up with $129,546. If you wanted to be more aggressive, an alternate that has a larger number of trades, maybe a 1-day drop would be set at minus 5.8%, stop loss minus 18, overbought at 45, oversold at 10. That has 81 buys and sells, and it gets you $10,000 more dollars. So to me, if it was me, I would go with the first variable and stick with 29 round trip trades rather than one that had 81. But we just want to present the data that we have found. And so the next slide shows the same exact rules. So I won't go through and read them. They're the exact same rules, but for SOXL, we're not going to be using the Market Smith style stochastics. We're going to use the full stochastics in Thinkorswim. So it calculates stochastics a little different than the way the Market Smith ones are. We still use the 533 exponential moving average, and we've chosen close-in prices. You can make it different than that if you wanted to, but on the preliminary basis, 1-day drop, and through hundreds of back tests, we found that these are the idealized numbers of minus 17.7, stop loss of minus 28.4, overbought 34, oversold 12, in a 5.7 year back test, 24 round trips, 24 buys and 24 sells. We ended up with $143,000 in an alternate that has a significantly higher number of trades, 204 buys and sells in the same time period, but we end up with $277,000. You can see the numbers are minus 3.9, minus 20.2. The overbought's at 36, and the oversold is at 10. For a trade that went for 20 months, this is my Thinkorswim setup for TQQ. I pulled the Market Smith stochastics, which is programmed in. I use a 533. My overbought line is at 37 and my oversold line is at 10. And I marked every single buy or sell. There's 10 buys and sells. And this strategy gained 42.7%. Each buy and sell is marked. The strategy had us in cash 186 days during those 20 months, or 44% of the time. If we had just purchased TQQ on January 1, 22, on 8/31, we would have lost half of our money. And it's primarily because of how challenging 2022 was. I think TQQ dropped something like 85% in 2022.
People are asking if we've been involved with the SQQ. We've looked at it, but we're working on a strategy that'll combine the two. We have nothing to present there yet. We're just beginning on that. People ask, are these rules using the 533 stochastic? Yes, on a weekly chart, not a daily chart.
We're sticking to the weekly chart. And TQQ, we're using the Market Smith type stochastic calculation with 533. With SOXL, we're using what's called full stochastics, a slightly different calculation with 533.
The standard stochastic that Thinkorswim defaults to and they have an indicator called Stochastics full.
Thank you, Rick.
And we can say that all those numbers, all those percentages that Floyd mentioned were gained from us doing that back testing. It was not intuitive that we'd come up with those numbers through the hundreds of repetitions of using the spreadsheet. Those are the best ones we found so far.
I would go through and maybe spend an hour. What if I was doing it by hand would take me darn near a year. And I would go through and try dozens of combinations to find what produces decent results. Some of you may be saying, why is that overbought line all the way down here to 37? And so I just did a test, I think it was yesterday, and I raised the overbought line to the 50 position and just said, let's raise it from 37 to 50. What does that do to our performance? And it caused us to do 2 or 3 more, maybe 4 more trades in total. Instead of making 42.7% during those 20 months, it only returned 18.8%. So to me, it anticipated a question, why do you have the thing all the way down to 37? It's just the nature of how TQQ moves, and it moves at quite a bit of speed. The higher you raise that overbought line, the poorer your performance. And that's something I would have never guessed and only discovered it as we did our hundreds of back tests to optimize how to trade TQQ. Great questions.
We don't know why that's the best either. We're just presenting the results as we've seen them, the actual buys and sells, that the back testing with those rules produced. We don't know why this works, but this is the best we found, and we're giving you the raw information.
This table is produced by Rick's spreadsheet program,
which we're going to show you in a few minutes.
So this is the date, the price, and why we sell. This is rule number, you see, I can't find my mouse here because it's white. Anyway, the first sell was because the fast line crossed below the slow line on the weekly. This shows the value of your account and drawdown and et cetera. So we can also show you graphically, which our program also produces. This is the TQQ strategy, the blue line, and the gray line is buy and hold. For 1.7 years, this shows how we made the 42.7%. Wherever you see a flat line on the graph, that's when we're sitting on cash. And that's where you might have an opportunity to really accelerate what you're doing if you can come up with a productive way to go to SQQ. And we experimented with that a little bit. And when we tried it recently, we said, okay, when we buy SQQ, let's put a 5% trailing stop in because we just want to get out of it if the thing reverses. And at some point, it's sold and got us up. So here's another graph at 5.7 years using the TQQ strategy. And we had 29 buys and 29 sells in that 5.7 years. And $10,000 turned into $130,000. Buy and hold grew to $32,000. So
another question, actually the questions are starting to come in faster now. Would you share your Thinkorswim layout with us? Yeah, I'll share my screen and show some Thinkorswim. I'm not sure if we have ready to, I play with my Thinkorswim setup all the time, so it's not going to be identical to this. Next question, different stochastic between TQQ and SOXL, right? So TQQ, we're using the Market Smith calculation. SOXL, we're using the standard calculation.
Did all the back testing. We had a wide open mind, no preset biases or conditions. We tried the Market Smith type stochastics at 533. We tried 644 and 1055. We tried all kinds of difference on the Market Smith side. We tried on the standard side and kept running back tests to say, how do we get an optimized return? And for reasons that I'm sure there's a mathematical reason I can't explain it. For TQQ, we get better results when we use the Market Smith style stochastic calculations set at 533 than if we use the standard stochastics. And we have the opposite when we go to SOXL. If we use the Market Smith style stochastics, we don't get as good results. I think it's the nature of the volatility and how those exchange traded funds move it just works out that one performs better with the Market Smith style stochastics, meaning TQQ. And for SOXL, it's the standard stochastics. And I couldn't tell you if we wanted to set this up for FAS or NAIL or UPRO. We haven't done the hundreds of tests to say what would be the best variables for those, but partly because we have limited time. But when I saw what the volume traded per day was for TQQ and SOXL, between 50 and 100 million shares a day, I just said to myself, okay, that's what I want to be involved in. No other reason. So I hope that helps answer the question. And so, Rick,
some more questions too. That's the reason why we are going with the weekly versus daily. We also tested weekly versus daily. Even with those short ball 533, that's like a 5-week moving average and a 3-week moving average. That still produces better results for us so far. We're looking at different kinds of rules too. These are the rules that Floyd came up with. I think Floyd has a very good intuitive sense for these things. And that's what we got so far. But that's why we went with weekly instead of daily, because it's just what the results showed us.
For me, with my personality, I like a system that only requires me to buy and sell on the average of maybe once a month or once every other month. I like a strategy that I'm not in and out of TQQ or SOXL every single week. The more times I get buy and sell signals, the more times I have a chance to mess it up. Or maybe I'm busy and I'm not at my computer. So it's all up to the individual of what works best for you. Go ahead and keep submitting your questions. I appreciate you doing that. I'm going to stop sharing. And Rick, I want you to demonstrate your spreadsheet program for us.
Okay. First, while I pull mine up, Floyd, you can answer one question, which can you do it in the middle of the week or do you wait till the end of the week?
The way the rules are written, if you follow the rules, let's call them suggestions instead of rules. If you're following a weekly strategy, if you get a cross on the buy side or a cross on the sell side, those transactions happen on a Friday. If you're a more aggressive trader and maybe on Wednesday or Thursday, you say, well, it's really clear that I've got a buy signal and I'm seeing stocks in the index going up appreciably. If you want to buy a day or two early, I'd say go for it, knowing that you may be slightly increasing the risk. But if it's a head fake, and by Friday, TQQ or SOXL have turned lower, you may be in a position where you need to sell it. So if you're a conservative investor, on the cross up and the cross down, you would only do those transactions on a Friday. But for the 1 day stop, that can happen any day of the week. And the trailing stop can happen any day of the week. So I hope that answers the question. And my thought is that we could take 100 of us and give 100 of us $10,000 and say, come back in 2 years. We would have 100 different total values, even though we all thought we were following the same rules, because we have our biases, our druthers, or maybe want to cheat a little bit and get early, or maybe we get a sell signal and someone might say, I'll wait one more day. Overall, the rules are there to help you follow those trends up, minimize your participation in the trends down. So at the end of the period, whether it's 2 years, 5 years, or 10 years, you have a really nice account total. That's the goal. Go ahead, Rick.
Or another question, was the overbought line based on the fast line or the slow line? The fast line is the answer, right?
The overbought and oversold lines are independent of the fast and slow line, but when you're making a decision to buy or sell, you're using the fast line's position to decide whether it's a valid buy or sell signal. I hope that answers the question.
This is TQQ over the last 3 years. And I just wanted to show, this is not our trading program, but I want to show you like what my, at least me personally, is kind of my inspiration for this. You know, what we're trying to capture here, you know, is simply the big swings, right? We see that TQQ makes these big swings. Sometimes there's crazy volatility. Put these trend lines in to show just how big these moves are. This is what we're trying to capture. In June 22 through August 2022, in 60 days, TQQ went up 77%. Then it came down 54% in 61 days. That's where we want to get into SQQ and try and capture that. In TQQ then here going up 35% in 34 bars, which is 34 trading days, 47 calendar days. And again, another swing here, 66% in the beginning of January to at peak in early February. And then most recently, 121% in 128 days, which is 4 months, March through July. We're just trying to capture a piece of this. We can never achieve this, which is, selling exactly the top and buying exactly at the bottom. But we see the same kind of thing with SOXL, which are the two that we're concentrating on here. These are just huge moves, 100% here back in October last year in just 2 months. Another 98% move. Even this little one is 32%. And then recently 116% from May to July, just over 2 months, 98 days, 3 months. And now we're in this choppy period right here. What we're trying to capture, right? As we work to implement a strategy for the inverse ETFs to capture some of the down move too, without losing our profits. So I'm going to switch over and show the spreadsheet. This is still very much a work in progress. This is just for our internal use. I have no plans to sell it or give it away, but because I want to emphasize that there's nothing magical what I did in the spreadsheet. There's nothing ultra sophisticated. I'm going to show you how I break everything down into bite-sized pieces. First of all, where do we get the data from? If you use Microsoft 365, the latest subscription version of Microsoft Excel, it comes with a stock history function, which loads all the data. You basically tell it your starting and ending dates of the data, which ETF you want to bring back. I'm planning for a short ETF, but we're just working with the long now. So SOXL, that one function pulls back the whole chart of prices from 2012 to the present. The same with the weekly too, because I'm using both daily and weekly for the calculations. I'm using the daily to plan the buys and sells, especially the sells can happen on any day of the week. But the weekly is what we're using for the stochastics. This Microsoft function pulls in our data, and then I wrote a macro that copies it to a big spreadsheet. This is the same data we saw come in from Microsoft. I made a column for each piece we're trying to use in our sell rules and buy rules and implement them here. And we got some other stuff we're working on for the future here with ATR and applying simple moving average and exponential moving averages. Here is where I break down each of these 3 elements of calculating stochastics. This is on the dailies, but if I switch over to the weekly tab, this is the 533 that we've been talking about for standard stochastic and market stochastic. Each one of these is just the formula for calculating. This is the equivalent formula of the script that Floyd showed before in an Excel function for this look back period, the fast and the slow, the 533. And as you can see, the market one, as Floyd said, it chops off the decimal. So these always come out as whole numbers, but this is the fast line and the slow line that are plotted. In MarketSmith, it would be in MarketSmith if MarketSmith used a 533 instead of the existing 455. These are the numbers we use. So we're looking to use these for enhancing our rules, especially to cut down on drawdown. The drawdowns are very big with the testing we've done. I made basic functions to say, has the fast line crossed above the slow line? That's really all this is doing, is it's comparing the fast, is the fast line rising, and is it crossing above or below? Is the fast above the slow? Is the fast line rising? Another possibility is the fast above the overbought level, which right here is 35. This is set for SOXL and is fast below the oversold, right? All of these are elements for calculating if the buy and sell rules apply for each day. Then we go back to the daily tab. I'm just pulling in that weekly data. I know I'm going through it fast. I just wanted to give you an idea of what we're doing here. how we're calculating. So this is a very big spreadsheet. We have over formulas and 248,000 cells with data. So it ends up being really big and it's quite slow.
Rick, scroll over to the right to show
The results.
this strategy in 10 years had a account value of 1.7 million.
Yep. It hit 1.7 million when we sold it back in April, and the system bought again, and we've lost a little bit. So today, 1.634 million is where we're at. We hit 1.9 million and buy and holds 400,000. So we're doing much better. An insane amount. Like Floyd and I are fully aware this is a crazy amount, and this is 10 years. So basically, I'll show you the summary screen here in a second, where all the calculations happen. And you can see that the maximum drawdown, if we're going to stay with this system, we had to live with a 48% drawdown from the peak. Lloyd, with your permission, find where that was. It hit that peak right here. Earlier, I think it was November 2021 when the market peaked. The account peaked at just short of 1 million. Throughout 2022 up to July, it pulled down to 516,000. That's a 47%, 48% drawdown.
We can pull up your chart. I can't see it visually.
Over that whole 10-year span, it hits its maximum right here, November 21 at the peak of the market, almost 1 million. And by July, down to 500,000. That's one of the things we're working on now. We know drawdown is huge, always working to improve the system and come up with different strategies that address issues like drawdown. As you can see, if you stuck through that, it's been, 2023 has been outstanding results here. Again, I want to emphasize that this is just backtesting. As they always say, past results are no guarantee of future results. There's no guarantee that the backtesting will be reproduced in the future. But again, the idea is we're just trying to capture these big swings. We know with SOXL, with TQQ, there's always going to be big swings up and down. We'd love to capture the down so then we don't have a bias. We don't care if it goes up or down, we'll still be making money. So we take all these trades that you see, all these day-by-day calculations, we gather them in one sheet where it summarizes all the trades, with these stop losses we put in place, especially for SOXL. Almost every sale is a one-day stop loss. And I'm looking at this and you just see all these losses. This is 2022, right? This is the bad times. But really we end up with 2022 losing very little. And once we get to 2023, we got big, nice returns. I never would have looked at this and thought this would end up being $1.6 million.
Challenge, Rick, I just want to interject, because what you have on your screen is a strategy I probably would never use, because this particular strategy required 316 buys and 316 sells. And there's another SOXL strategy that makes 1.3 million that has 1/10 as many trades. I would be more comfortable making a little bit less total money with 1/10 as many trades.
I lean more toward this. I don't mind trading a couple of times a week. The one Floyd's talking about has a big stop loss, like 18%. That one has such a big stop loss that makes me uncomfortable. Different strokes for different folks, to use an old phrase. We all have different tolerances. We all have different preferences.
Rich, is the Market Smith 1455 out the window? From our back test work, if you're using the weekly strategy, which is what we're putting forward here as a successful way to trade, the 1455 does not give good results at all. The 533 gives good results. I hope that answers the question.
I can show a little bit about why and how I came up with the 533. We're going to pull up SOXL. This is a weekly chart. SOXL, we use the regular stochastic, not the Market Smith stochastic. With the 533, if we use a 14-week look back period, it misses the swings. And so you can see these swings, this is like 3 weeks down, 1, 2, 3, 4, 6 weeks up, 4 weeks to the bottom again, and then a bunch of weeks going up. Just through the back testing, we find that the 533 produces the best results. I understand it's because it's capturing these swings, because the swings are about that far apart. So that's a quick reason why 5 through 14 weeks. This is just using the regular built-in stochastic setting in Thinkorswim called Stochastic Full. And I'm setting it for 14.55, like Market Smith. This won't be exactly like Market Smith, but it's showing this 14-week part. Market Smith does settings with only the closing price for the day in the calculations. I think it seems to also work really well. Now that we change it to 14 weeks, it's not capturing the up and down swings now. It's looking at these long swings, and it missed this 32% gain and this 100% gain. From the stochastic point of view, it's just going from the middle of the stochastic to the high, and it's not capturing that as a buy or sell signal. It's not, because you want to, the stochastic works best when the fast line goes way down and then comes way back up to capture the move that crosses over the slow. The blue is the fast line and the slow is the red line. And so it's capturing, it's capturing a buy signal right here. But we have to ignore the buy and sell because I changed a lot of stuff in there.
Rick, as a time check, it's about 8:20, so you might want to get over to your summary. You might want to explain this tab because time is moving by pretty quick.
Yep, sounds good. So what I did on the spreadsheet, we had a number of different summaries. This is the SOXL one with 316 round trip trades in 10.6 years of trading. So, and that ends with $1.6 million, which is an insane amount. 3.8 times better than buy and hold, 288% better than buy and hold. The worst trade out of all those 300 round trips is 11%. One of my big jobs is to figure out why it's working, why this works so well. It's like a buck and bronco. And we can see even here, the number of trades with each result. You have a huge number of trades with these 0 to 5% losses. There's actually more negative trades than positive trades, but the positive trades are bigger than the negative trades. The result comes out to 61% annual growth rate. And we can see an SOXL strategy broken down by year. One of the big benefits is the buy and hold, these big loss years, especially 2022, we actually come out with a slight profit using this system, which is not intuitive when you look at these trades and there's so many losses, but yet this comes out with a 2% profit for the year 2022. Floyd, what do you think? Anything else?
Well, yeah, here's what I'd like you to do, Rick. Go on the page you're on, go up and put in TQQQ.
Minus 13 on the 1 day. Now we're going to have to pull the data in, right? Floyd, right?
Yes, then, go ahead and work your magic there. I want you to move the trailing stop to minus 18, I believe.
Wrote a little script here that's going to repopulate all this data.
Just push the button there. I want you to put no on the stochastics.
We're doing a live demo here, crossing my fingers that it's not going to break. So it's going to use the emergency calculation.
But 37 on the overbought. The trailing stop should be minus 18.1.
Every time I'm making a change here, it's recalculating everything.
18.1. We end up with $597,000 in 53 trades. Instead of having 300 round trips, we have 53 round trips. This is TQQ using the Market Smith style stochastics, but we're using 533 for the look back. Overbought 37, oversold 10. We had 27 stochastic crosses. 4 times we were stopped at the open. This is in 10 years. 21 times we were stopped during the day, and we only had 1 time that we had the 1 day stop. And so the 1 day stop didn't have much effect on what we were doing here. If I only have to do 53 round trips in 10 years, I can take $10,000 to $600,000 with a compound annual growth rate of 46.6. That works for me. If you go over to the rectangle to the bottom right, you can see that we did lose 20% in 2022 with this strategy. The buy and hold lost 79%. There's probably a fine-tuned way to improve on this so that we don't have a 20% drawdown in 2022. I'm just showing you by this quick little demo. I asked Rick to change from SOXL to TQQ, and you can see in just the 2 or 3 minutes, we completely changed the security we're looking at. We changed the stochastic. We changed our stop loss values and calculated the whole thing over. Instead of making 1.7 million, this one makes 600,000, but I like it. It's only 53 trades. Rick, do you have anything else that you want to cover before we switch back over to me on the presentation?
So we can show the chart of the TQQ. What I do want to highlight is this is a huge drawdown on this strategy. Boy, the other interesting thing is the fact that we're behind the buy and hold through all these years until the COVID crash. We catch up. Actually, we're still behind buy and hold, but we completely outperform buy and hold these last 2 years and end up exceeding it by 72%. All these different strategies have their own pluses and minuses. I have this linear chart and the log chart, which shows the percentages better. I don't have it,
Hey, Rick, do you know, is there a way that we can capture all of the comments and questions that were made before we close out this session?
Should be able to save that.
So why don't you do that and give control back over to me?
Yeah.
And I'm going to go back to screen sharing, and then you can take a look at the questions to see if there's something else. I saw where George asked a question. Do we have a spreadsheet that shows performance of when we go to the inverse? And we don't have a spreadsheet that shows that yet, George. That's a work in progress. We've actually done it live and made money the way we did it without having doing our back testing yet. Just sort of a intuition thing on my part is when I go to SQQQ, I immediately put on a 5% trailing stop so that if the thing turns south, it takes me to cash real fast. That's just an order you can make with your broker. We don't know yet if 5% is the right value. Should it be 6%? Should it be 4%? We don't know right now. So go ahead. I'm going to go ahead and go forward. Then this is just a review.
I just want to point out, you are invisible right now. We just see your background. I don't know why.
Okay, I'll go back and share again.
No, you visibly on the camera. Not your screen sharing was fine.
Oh,
there
I covered myself up. Can you see the table now?
Yes.
This is just a summary of what Rick was showing. The only thing maybe we didn't quite notice on TQQ is we were in cash 23% of the time. You can see in this very bottom rectangle, we had one trade that made 99.62% profit. And when our worst trade was 18, the peak value on that one particular strategy was 839,000 and our ending value was 16% below. For SOXL, the one where we had over 600 total trades, 311 round trips, we ended up with this 1.7 million. We were in cash 53% of the time, although I have a feeling that was a lot of 1 and 2 and 3 days, but it added up to 53% of the time. Our best trade, 36, worst trade minus 11, and we were 7.7 off of the peak. This shows SOXL graphically 5.7 year, made 2,566% versus the buy and hold. Here's a summary table for TQQ and SOXL. We ran these numbers together so it'd be easier to absorb. For TQQ, during that time frame, we had a total of 48 trades, evenly split between stochastic crosses and being stopped out during the day. For SOXL, the one that had 312 round trips, the vast majority of the trades were just a one-day stop. So Rick is fine with that. We have a different SOXL strategy that instead of having 312 round trips, only had 43 round trips. The majority of those were stochastic. That one had the vast fewer trades. Instead of having an end value of 1.7 million, your $10,000 grows to 1.364. If we go to 5.7 years, which to me is more realistic, because if we go back 10 years, we were in an incredible bull market. You could have just blindly just did a buy and hold, you'd make a ton of money on these things for about 7 or 8 years. But if we look at the last 5.7 years, that's a little more realistic to what it may look like in today's conditions. For TQQ, with 29 trades at the end of 5.7 years, ending on 8/31, we had $129,000. The majority of the trades under SOXL were being stopped out at the open or during the day. The majority of the trades were stochastic crosses, depending on which leveraged ETF you choose and strategy. You make between 129 and 256,000. Any of those, if you take 10,000 to any of those, to me is a story of success. So what are our conclusions? Our conclusions are for active investors that want to use leverage ETFs, we've shown you how to use Thinkorswim or other tools like TC2000. We've given you preliminary settings, I would call starting points from our back test. And these settings produce pretty darn decent results. You can see that we had 29 trades on TQQ in 5.7 years, went to 129,000. If we want to have a higher number of trades, it only gives us $10,000 more dollars. SOXL, we've given you a couple of choices on settings. One has 24 trades that ends up with a value of 143,000. If you're wanting to do, or you're okay with doing 204 round trips in 5.7 years, you end up with 277,000. These are pure mathematical numbers based on the mechanics of the spreadsheet. It's just the program is blindly following the rules that we insert and the percent values for the 1-day drop, for the stop loss, or where we have the overbought and oversold indicators. So it's just a dumb program. It only does what we tell it to do. But Rick and I can't go in and say, let's don't do this trade this day, or let's hold on for another day. It only follows the rules that we put in. I think I learned that lesson from some Zoom calls I was doing with Rajiv probably 9 months ago. If you tell the program what the rules are for buy and sell, all you can do is stand back and watch, because it's only going to execute what you tell it to do. So we have a meetup challenge, Rick and I do. If you've developed a back test levers exchange computer program, not just some pie in the sky idea, we'd love to see it. Both Rick and I would love to see it. Please share. We'll carefully review any strategies that are submitted. And next month, or maybe the month after, we'll announce who came up with a better or the best strategy. Full credit, 100% credit given to the person that submitted it. In fact, we'll even invite them to make a presentation and say, let me tell you why my strategy is better than Rick and Floyd's. And we would love to see it. So feel free to share. We're all in this thing together. You know, we all learned under Bill O'Neill. Bill was very gracious. He didn't have to start the newspaper, and he didn't have to write the books, and he shared investing strategies that has helped many of us become successful. That's what we're doing here. On October 12th, and maybe in November, Rick and I plan on demonstrating how to use inverse leverage exchange traded funds with the strategy we've developed. When you're supposed to be invested, you can use our rules and buy TQQ or SOXL, but when the program says it's time to sell, what happens if with TQQ we go to SQQ, and with SOXL we go to SOXS? Join us next month to learn about it. I call this our turbocharge approach. If we can take $10,000 to $500,000 and spend half of our time in cash, maybe we can make it into $700,000 or $800,000 if we take advantage of the power of the inverse.
Floyd, I want to set expectations right. We're not promising a finished system on October 12th, present what we have so far. We both have regular jobs too, and we're passionate about this.
We may not be totally ready by October 12th, but we should have more information. Plus, I would love to see if any of you out there want to share as you have, or maybe someone has a fantastic idea on how to take our strategy and tweak it with just one additional rule. Maybe we'll reduce the amount of drawdown. Rick, do we have any other questions that have been submitted that we should address.
Somebody asks, does this make leveraged ETFs using
I think that if you were to stick with Market Smith, the daily, weekly strategy can produce some positive results. I don't think the daily strategy by itself will, but I can't definitively answer the question because when we got into Rick's program, we just focused on trying to optimize the best way to trade TQQ and SOXL. We haven't tried to optimize trading if the stochastic parameters are 1455. I can't for sure answer the question, but I'll tell you how I'm behaving. I stopped using Marcus Smith for leveraged ETF trading through some coaching that Rick has given me as a tutorial on how to use Thinkorswim. I'm solely using Thinkorswim now with the 533 variables on the weekly charts for my buy decisions. I hope that answers the question. I personally had success trading leverage ETFs using Market Smith when I was just visually picking the numbers off. But I'm convinced a good way to go forward using Rick's program and Thinkorswim.
Somebody, is there an average of drawdowns that could give us a clue as to what a possible stop would be?
When we've gone through our program, which is mathematically correct, when we have used lower stop values, we get lower account totals. So you may have less drawdown, but your end value is significantly degraded. If we lowered our 1-day stop value or lowered our stop loss value so we didn't have as much drawdown, would that be a good strategy? From all of our back testing, if you lower those numbers down, you'll have a much lower account total at the end of the test period.
Yeah, that's what our testing showed. As Floyd's been saying, he did hundreds of tests. We're trying all these different values to hone in on the optimum ones. And that's what he found. That's why they're so different on each one too.
In all fairness, to answer that question, on the SOXL strategy, we did lower that 1-day stop value, but we increased the number of round trips from something like 40 or 50 to 300. If you're willing to increase the number of trades you do every single month, you can reduce the amount of drawdown, but then you become a much more active trader.
Somebody asked, did you also compare Q and TQQQ with the same rules? Honestly, I haven't spent much time running the same rules on QQQ because we have such nice 3x results with the TQQ. I don't know if you've played with that, Floyd.
I did use Rick's program and I put in Tesla and NVIDIA. With Tesla, I got cool results. With NVIDIA, I did worse. The program allows you to enter any symbol of any stock, mutual fund, ETF, and then you can play the game about what's your stop loss values and where you're overbought and oversold. The program is focusing on whether you're using stochastics. If you wanted to use a totally different indicator, there would have to be a complete reprogram done. Right now, the program focuses on stochastics being the primary driver. We put the stop loss values because if you use stochastics only with no stop loss values, the results aren't pretty. We wanted to have some downside protection there is why we put those in there. But there's other programs out there. Dennis Wellman over in Honolulu, who does the Bay Area Money Managers, uses a PSI indicator. Dennis Wilborn, there's other indicators that may produce just as good or better results.
One of the things I've been playing with, adding a 50-day moving average and not doing buys when the 50-day moving average is tilted down. The overall results got reduced, but with SOXL, just one night of playing with it, the volatility, the drawdown got reduced, but the results got reduced. And also, for some reason, it didn't seem to help at all with TQQ. There's a lot of more work needs to be done, but that's the kind of thing that I'm going to still keep pursuing playing with, is adding different rules to especially cut down on the drawdown, can we, how can we apply moving averages to this? Like right now, the sells are mostly, especially with SOXL, the sells are almost always from hitting the stops, which I don't consider the best way to do your regular sells. So I'm looking at profit targets.
If you look at SOXL, what you're saying is true if you want to do a ton of trades, but if you take the SOXL strategy with a smaller number of trades, your main driver is when the stochastics cross, not the stop. It depends on how you set up the program and trade. And so if you're okay with doing in this 5.7 years, if you're okay with doing 204 buys and sells, most of your activity is going to be on this 1-day stop variable. But if you're okay with setting SOXL up with the smaller number of trades, then your main driver is when the fast line crosses the slow line. There's different things going on. It's sort of like a mini workshop. We're sharing what I think is fairly exciting news. I'm using it myself actively. I personally hold a large position in TQQ and SOXL, and we almost got stopped out of SOXL. In fact, let me stop sharing for a minute and I'll show you my.
Maybe we can also take some questions by voice too, if you want.
I'm trying to figure out, I'm sort of in a crazy spot. When I go share screen, which box do I click on so that I can show on my Thinkorswim?
Yeah, one of those boxes should be the one that is Thinkorswim in the window.
I want to show my Thinkorswim window.
Just put your Thinkorswim window in the window that you're just sharing, like put it in the same window with your slides and then share that same window.
Here we go. Can you see my Thinkorswim?
Yeah, perfect.
Let me show you. This is how Rick taught me how to set this up. And I've got a window that's blocking my view over here. But this is TQQ, and this shows where the buys and sells were. But notice the position using here's the Market Smith stochastics, and these are the full stochastics. For TQQ, we are clearly in the buy zone. There's no threat at all. Everything is cool. So we bought over here on, looks like is that 828? We had the buy signal, and that's where we had the crossover. But let's look at SOXL, which looks very different. For SOXL, we're using this bottom screen. Notice that the fast line had crossed below the slow line, but it was still above 34. If SOXL has a couple more challenging days, using the rules we've developed, it will tell us to sell. So SOXL looks very, very different. So this is the setup I have, that I have the weekly chart in front of me, the Market Smith stochastics set at 533. I've got the full stochastics at 533. So when I'm looking at SOXL, I just look at the bottom. When I go to TQQ, I look at the top stochastics. I have confidence that I can trade using this system. And the part that's a little bit variable now is if I sell SOXL, do I immediately go to SOXS and then put in my 5% trailing stop? But I'm convinced that this is far better than me trying to pick off buy and sell signals off of the Market Smith stochastics. We only 7 minutes before we hit the 9 o'clock hour. Does anyone want to unmute themselves and ask a question to the group here?
Hey Floyd, this is the mayor. Thanks for all the work here. Any chance you have a return comparison compared to the daily weekly strategy you presented on the IBD National Virtual Meetup back last year?
Have it, but I can develop that. Send me an email at investor@gmail.com with that question, and I will get you an answer and share it with the group in October.
Thank you.
Anybody else? You've been pretty quiet, George.
Greetings from Delaware. I believe that in Thinkorswim, you can send out I'm not too sure what they call it, but it's the way to set up the chart so that it'll mimic yours exactly as you have it shown here. Is there a way to do that?
Wait a minute. I am in Thinkorswim.
Yeah.
This is what I can guide you. Go to the top right, share workspace.
This one?
Yeah.
Yeah.
You can say, give it a name, Floyd setup or something.
Oh, like here?
But yeah.
Lloyd's, POS for TQQ and SOXL like that.
And when you say share, it will give you a link. We need to quickly copy that link.
No, it's already in the clipboard. He can paste it down. Just paste it right into the chat.
Oh, tell me how to do that.
Just go to the chat where you type your message and then hit Control V to paste.
There we go. You got it?
And then hit the send button, the little arrow button.
I did.
Oh, okay. Yes, I see it.
If you click on that, you can duplicate the way I have Thinkorswim set up. Is that correct?
Yeah, it allows you to import your settings. Floyd, you posted it to the waiting room. Do it again, change it to everyone.
Hey, you're dealing with an old man here.
I got it, Floyd.
One thing I'll show you now is if we click on this strategy right here, if I right click and it says edit study, you can see here's where the 533 is. And my overbought is 37. Oversold is 9. Actually, I want that to be 10. I can change these if I want and then apply it. Must have said 9 before and it should have said 10. And so you can go through these strategies and right click and edit those. This is where you say, what happens if I want this to be like, let's say 8, 4, and 4, apply it. You see, it completely redrew the stochastics. And so I could study that and say, is that something I'm interested in? I want to go back and put that back to 533 because that's where I want this to be.
Have you looked at the strategy report on this?
No, you have to build a strategy for actual buys and sells. He's just looking at the indicator here.
Oh, the indicator is doing the buy and sell. It's not actually doing the buys and sells.
I manually typed in these buys and sells from the programs
From the Excel.
trade tab. I manually put these in. There's a way to program Thinkorswim so that it populates just for you.
You are willing to do a lot harder work than I am.
Well, I was getting ready for this presentation.
Floyd is not afraid of manual work. And he did that manual back testing before I made this thing. He did unbelievable amounts of back testing manually for all those previous presentations.
I did a ton of back testing, and then my friend Rajiv calls me up and he goes, I don't think it works very good, Floyd. And I go, okay. Fortunately, Rick raised his hand and says, here, Floyd, let me help you out, buddy. I know how to program.
Didn't we see the buy and sell signals earlier? Was that not on Floyd's chart?
That was on Rick's chart.
Got
Yeah,
it.
there was some on mine, but that was using different rules than what we're showing here, so I didn't stick showing you that. I've done some of that because a lot of people are asking about programming that in TOS. What I found is that you can implement these buy and sell rules almost completely in TOS, except for one facet, and that's what I'll call the multi-day trailing stop, because TOS does not have a way to keep track of how it would change from day to day. At least I haven't been able to figure it out. You could do a one-day stop because you're just comparing it to the previous day's close. But for a true trailing stop, that's the one piece that comes up short in terms of actually implementing what we're trying to do here. But it comes close.
So we're about out of time. There was a question that says, do I believe that Marcus Smith will allow editing? One could hope. The very senior person I talked to, I said, if you guys don't, not only my request, but I'm sure other people have requests. I said, if you don't keep updating Marcus Smith and you're charging people $1,400 a year, Thinkorswim is free. If you guys aren't careful, you're going to find your number of subscribers going down. I had about 3 suggestions for them, and we'll see if they implement them or not. But the guy I talked to said that they get a blizzard of requests and said some of them are reasonable and some of them are crazy. I don't know what their refreshed schedule is. Are the buys and sells based on first stochastics or second stochastics? I think you're asking me if it's based on fast or slow stochastics.
Or what Floyd was showing on his screen, he had markets with stochastics on the top and standard stochastics on the bottom. Is that what you're asking about?
Yes, that's what I'm asking about. Is which one will buy you?
The top one for TQQ and the bottom one for SOXL.
But on the graph where the candlesticks are, there were buys and sells. Was it based on the TQQQ or the XOX? SOX?
That chart was for TQQ only.
Okay, perfect. Thank you. Appreciate it. Great work. Really appreciate everything you've both done. It's fantastic.
I hope people found this to be productive. We tried to share a lot of things we found. This discovery of having the overbought and oversold line, maybe in not a traditional position, and that the 533 seems to work great for the weekly chart. Rick's amazing program with 200,000 equations cranks through and shows the results. I'm convinced enough that I'm using it for my trades, and we're talking pretty good account size too.
Can you share the other one? The one that you share only have the stochastic full, and you have the stochastic market smith. Can you share that one as well?
Sure. You're asking about this chart? Top one right here. This is called Market Smith Stochastics. We use the formula that Mike Scott and Rajiv helped retrieve from the source code. Change the units to 533. That's this top stochastics. The bottom level stochastics is what Thinkorswim calls full stochastics. So it calculates stochastics a little differently, but we still use the 533. But you can see the lines are very similar, but they are not exactly the same. When we go through our backtest program, if we take TQQ and we use Market Smith Stochastics, and we get a $600,000 value at the end of 10 years, if we run the same back test with full stochastics, maybe we only get $400,000. And so there's enough differences in there that when the program uses our buy-sell rules, picking the Market Smith style stochastics or the full stochastics make a difference. And then we flip over to SOXL.
So when do you use the top one again?
TQQ,
And then when do you use the bottom one?
SOXL.
I see. And is there any way we can get the top one?
The top one, actually, Rajiv already pasted the code for it in the chat.
Yeah, if you look at Rajiv put the code in, because Rajiv helped develop that. If you look at the chat, you can see exactly how to program and get the Market Smith style stochastics, and then you just change the 1455 to 533.
If you click on the three dots, you can save the entire to your hard drive. You'll be saving Rajiv's code.
And you did that, right, Rick?
I've already done
I
it.
would like to go through the questions to make sure if we missed one that we get an answer. This meeting is recorded, so probably by Saturday, I'll send the recording. I'll send a copy of my slides, and I think Rick is going to put in some bonus material that we'll also share with you. So then roughly on Saturday, you'll have some good information to use. I think the main point is that there's no magic formula that guarantees profits. This is a tool to use. It's been vigorously back tested. We run hundreds of back tests, and it's all looking backwards. A future market may work better with different variables than what we have, but we think we've shined a light on a way that could help you be successful with TQQ and SOXL. But I would encourage you to do your own back testing, use your own intuitions. If you've got real money in the market and you're uncomfortable with how the thing is performing, just sell. Just go to cash and do a timeout and say, I need to figure this thing out a little bit better. Do not assume that what Rick and I have presented tonight, you can blindly follow and not have to worry about anything else. Our intent is to shine a light on a trail for you. This trail can take forks in the road and go in different directions. And I'm hoping from what you see tonight, that inspires some of you to say, I think I can do better than those two turkeys. And you guys actually develop something that is better. When you do that, my request is please share it back with us so that we can do better too.
Please do not blindly follow our numbers and trade money on it. Please do your own research. Tomorrow we may find something better and we don't like these anymore. It's all a work in progress for us. And I usually, like with the spreadsheet, yeah, I put a lot of work in on it, but there's nothing magic in there. Like do your own analysis. You may come up with a better solution than I had, especially trying out different rules, like profit-taking rules or moving average rules. We hope we've given you inspiration for your own research.
I really appreciate the kind words I saw in the chat window. I'll just say happy trading and God's blessings to all of you. We're all in this together. We're trying to help each other out. We're following in the footsteps of Bill O'Neill because Bill shared liberally. Bill's sort of my hero, and I'm happy that we could do this tonight. Thank you, everyone. It's been our pleasure to share.
Thanks, Ariel.
And thank you, Rick, for making this successful tonight. I appreciate it a lot.